Welcome back, everyone. I hope you're all doing fine and well today. So in this video, we're going to quickly discuss my last week trades, which are very interesting in a way, because not all of them actually close in profit, okay, but a chunk load of them close in profit. And I'm talking about 4%, 2.5%, 30% profit, which was quite decent, okay. And then we're going to discuss the COT data, the top setups, my top setups, and then my trade recommendation. We've already jumped to my trade recommendation. We're also going to talk about the economic calendar for this in a week. So without further ado, let's jump straight into it. So quick recap on my trades, the one I closed last week, which was quite decent. Okay, to begin with, I closed a buy trade on Bitcoin, which gave me a whopping 4.5%. And since I'm risking 0.5 per trade, so that was around 2%, so to speak, okay, in total on my account, around 2%, which was quite decent, okay. And on USDCHF as well, okay, USDCHF, I closed a very nice profit on that one as well. And then pound card, I closed GBPCAD, okay, also very decent profit. And then CHF JPY Swissian also, I closed a very decent profit on that one. However, these are the ones that were very decent. I mean, the average of the profits around 1% each. And because of what's going on in the market right now, the volatility, the uncertainty, you don't want to sleep on a trade for a long period of time. Okay, I would have loved to leave this trade to run for as long as possible, but because of the uncertainty, because Trump might just say one thing and the market will just scatter. I mean, we've seen it happen all through March. Now it's happening in April right now. April is actually a full-blown one since he started the reciprocal tariff, okay, which was very, very crazy anyways. Okay, I mean, we can all agree on that. So that's why I kind of closed all this trade. Like USDCHF, I still wanted to leave it to run for a very long time, but some part of me was just couldn't really agree to that concept of Trump keeping his mouth really, 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 really shut. Okay, I'm not sure you can do that. And when it comes to the United States dollar, it's gonna be very crazy. Pound card was too lazy, and I saw a little bit of a shift on the UK economy. That's why I kind of cut that one short as well. Swiss yen was also very fancy, but then last week Japanese yen actually just got super weak, which is gonna lead me to the trade that I was able to close in a loss last week, which is a very tiny loss. I'm gonna show you the screenshot. I mean, you've seen the screenshot already. So the losing trades are AUD/JPY, okay, AJ, and NZD, okay, NZD/JPY, and not just because dollar actually lose most of its strength last week. It's majorly because Aussie dollar actually got super strong and Kiwi dollar also got super strong. And yeah, let's actually start with that. Okay, before we talk about the COT data, let's take a look at the Australian dollar, the Australian economic heat map, literally. So when you look at it right here, it seems to be loading slowly. So let me see if I can duplicate this. Anyway, it's coming back now. When you look at this data right here, and you look at the economy, which is right here, this is the stock, this is the economy, and this is the currency. Okay, so we look at the economy around here, you can see the economy is still pretty strong, around 62.5%, all right, which is the stock impact is 62.5%, and the weakness is around 37.5%, which is this currency. And this is another reason why I seem to hold my Aussie yen. I closed some of my positions and I left some to keep running, which is the only trade I have running when it comes to currency. I have another trade running, which is NASDAQ, which I will share with you later. Okay, so this is the reason why I kind of closed the trade, because I can see the quarterly GDP looks quite weak. Okay, not super strong, but when you look at the manufacturing PMI and the service PMI, they are very strong. Okay, above 50. So that's very good. When you look at the retail sales is also below the previous, which is not good at all. Then when you look at this inflationary data, they all seems to be on point. Okay, 2% target, we have 2.4. That is very good. PPI 3.7. When you look at the previous, which is 3.9, you see that the actual data means the inflation is slowing down in Australia, which is very good. And you can see the unemployment rate at 4.1% from 4.2%, which is, from what was forecasted at 4.2%. That's really good. And the major part is the employment change. Employment change right here, which is a job that was added in March. This is a whopping 89,681 new job. Okay, people that got employed. That is massive. That is good. So when you have all this data together, it doesn't look like the Australian dollar is going to be probably weak for a long period of time. And then when you look at the impact on the stock market, it seems like the stock is booming, meaning that investors will be leaning towards the Australian stock market. So that is very decent, and that's one of the reasons why I kind of like partial close. I closed some of my position on Australian dollar last week. And then when you look at it on New Zealand is the craziest one. The currency is strong and the stock is strong. Crazy. That's why I just closed all of my trade on New Zealand yen. I closed every single one of them. And this is what I'm talking about. We take a look at the stock market right here, the stock and the currency. You see that the currency is around 71.43% strength, and the stock is also the same. All right. And when you look at the data one by one as well, you can see the quarterly GDP is still very weak. It's still very low, 0.7% growth. Not that interesting. But when you compare with the previous and the forecast, okay, you will see that it's a whole different show right there. The previous was around negative 1.1%, and the forecast is an increment of like around it should be around 1.5% increment. But we got a whooping 0.7%, which is around 1.8% increment. That is very, very solid. That is a massive growth, okay, for the New Zealand. And when you now take a look at the manufacturing and the service PMI, it looks quite stable. Okay, the service PMI is contrasting a little bit, but it's still pretty decent. Retail sales seems to be booming as well. So look at where they're coming from the previous, and look at the actual. That is a whooping around 1% increment. Okay, that is not small. The CPI and the PPI are slowing down. Inflation is massively slowing down in New Zealand. It is very good. Okay, and the unemployment rate as well seems to be stabilized. Okay, unemployment rate seems to be stable. Employment change also seems to be quite stable. Okay, it's also indicates a very moderately strong economy. And then that is why we have this reading right here, this course. It is just that. And that's why I have NZD dollar, okay, NU as one of my top setup and trade recommendation we're going to discuss moving forward. But we still have to wait for the setup to actually materialize before we jump into it. But, just relax and let's jump straight into the COT data. Okay, so when we look at the COT data right here, first off, we love to talk about the net positioning first off. And you can see right here, we still have institutions. These are the net shorts and these are the net long. The one that actually has the biggest number of buyers, okay, number of sellers right here, the net long and the net short. So first off, let's talk about the net short first off, okay, the currency that are most shorted by institutions, okay, the one that institutions are really interested in selling. All right, so we have Swiss still leading the pack, then we have Canadian dollar, then we have Kiwi, which is NZD that seems to be strong economically, right? And then we have Australian dollar right there. Okay, dollar is around average, okay, 50-50, so to speak. We're not going to talk about dollar for now. All right, so we have Swiss still very low, we have CAD still pretty low, we have NZD still pretty low, and we have Australian dollar still pretty and generally short, okay, being shorted by institution. And right here we have Japanese yen leading the buying pack, okay. It's been bought with almost 90%. Okay, almost 90% is being bought by institution. And then we have silver also generally being bought. It's close to 80% right there. And then we have gold also generally being bought close to 80% as well. Then we have US oil also being bought. Okay, I have a short setup, a self-trade setup on WTI last week, but I couldn't take it because I didn't really get any bars from Edgefinder, so I had to just chill a little bit instead of jumping to the trade. I have to just relax and see how everything actually materialized. And lastly, we have the NASDAQ right here also being added. There's some new position that have been added to NASDAQ, new long position, excuse me. And that's why I'm also looking to trade some NASDAQ. I actually have a trade on NASDAQ, but I'm looking forward to add some more trade to it. And let's start with Aussie. You can see Australian dollar right here. You can see we have new long contract and short contract being added, which is very fine, but we still have a general 75% short and just a measly 25% long. Okay. Moving on to NZD right here. If you look at Kiwi dollar right here, we have some new long contract being added right here, and some short contracts were closed. Okay, we still leave everything at 21% net long and 78.8% net short. Okay, we have US oil. I think US oil is one of our top setup, right? Good. So for US oil, we have very few of the long contract that were closed, and a bunch of the short contract was closed, leaving the whole net long, the net position to be 69.16% long, net long, and 30.84% net short. That is for US oil. Let's talk about CAD, and then we'll talk about CHF. Okay, I've not really seen Swiss. Okay, I've seen Swiss right here. When you look at Swiss, Canadian dollar right here, you can see a chunk of the short contract was closed, whereas just 92 long contract was added. Although they are not probably what this literally means is that they are not super confident on the selling side of the Canadian dollar, but at the same time they are not ready to go long yet. Okay, which is a story that we need to understand, because the reason why we study the COT data is so we can understand their stance in the market. And you can see the net long still remains 17.67%, and the net short is being probably reduced. It will be, as time goes on, if you continue to close this lots of short contract, we see that this will get reduced slowly. Right? So we still have like the net short to be around 82%, so to speak. So let's talk about CHF also. CHF also seems to be going up gradually. We have a chunk of their net short close, and a bunch of the net long was also open. I mean, we have a new long contract, which is 42, and we have some of their short contract was closed, leaving everything to be 85 short, 85% short contract, and 14.74% total long contract, which is still very decent. Okay, these are stories that I can't really explain right here, but when we get to the chart, maybe we'll talk about it further. And then Japanese yen, we have some of the added new long contracts and they clear some of their short contracts. I guess people are not really pulling back on the Japanese yen yet. I mean, institution traders, they still want to buy and hold on to their to their long contracts in Japanese yen. But we know that this Japanese yen, especially when it comes to the Bank of Japan, they are very, very slow when it comes to monetary policy, when it comes to taking charge of their currency as a whole. They are very slow. They don't just jump into things. They don't rush anything. They're very low. They take everything slow and steady. And I guess that is why we have that's why we can see what we're seeing right here. But at the end of the day, we have to see how this all being put together on the chart. So let's talk about the NASDAQ last and probably not least, obviously. So we have new long contract that were open and some of their short contract was closed, which leave the whole thing to be 33% short contract and around 66.29% total long contract still open. So that is that on the COT data. Now let's talk about the top setups, which are part of the reason why I have trade recommendation and everything is always mixed together. So on the long side, I have NASDAQ, which I'm looking to buy. I already bought. I'm still looking to add some of it, some trade to this NASDAQ because it seems like a very early entry because the market was bearish. And then once it broke above the trend line, that's when I took it back. Okay. However, we still have this high that I'm looking for it to get broken, retested. Then I want to add to the NASDAQ trade. When we get to the chart, we see how this whole thing is playing out. Okay. So because this is exactly what happened on the chart as far as NASDAQ is concerned. So the NZD-JPY seems to be bullish. And don't forget, last week I was shorting NZD-JPY. Since I saw it bullish, with the bullish reading right here, I have to just close the trade. I think around $8 loss. Okay, just around $8 to $9 loss. It's not really much. Okay, and then I have a trade set up on NZD-USD, buy opportunity that I'm still waiting on. The same thing on pound dollar, the same thing on euro dollar, the same thing on Aussie dollar. And then Bitcoin, I'm also looking to add to the trade. I'm going to open a new position on Bitcoin, but I'm also looking for a pullback. And the reading is just fine. So we can definitely get a pullback from the last week pump that I wrote, and then see if we can move forward to the upside. And then silver, I have a trade set up on silver as well. Now, when we talk about silver, silver is an underperformed asset because when we talk about gold, we talk about silver. And we can't talk about silver without talking about gold because they both move in a very synonymous momentum. Their correlation is very big. But we see that since the last time we saw an all-time high on silver and the market pulled back heavily, we've never really seen any new all-time high on silver. Okay, it's more like it's been ranging below 32. Okay, and when the all-time high we saw is around 38 or 40, I can't remember the all-time high anymore. But when we get to the chart, we're going to talk about that. But we can see that silver is literally moving around $32. So far, so good. All right, I'm not sure if this is actually correct, but it's around $32 to $35. All right, when it comes to silver, we've not really seen a fresh new all-time high. But when we talk about gold, we saw that last week we saw gold around $3,500, the highest it has ever been all time. And then it actually pulled back right now to around $3,300 and something, okay, which is still pretty high compared to the way silver is performing. Okay, this is XAU, which is gold. This is XAG, which is silver. Okay, silver had never broken the all-time high that it set last year. But we've seen gold actually make a crazy new all-time high. So I'm literally interested in silver because of that underperformance. Okay, I still believe if gold continue to break the new high, which is very likely to happen, okay, we might also see silver kind of just go crazy and wild and then break its own all-time high as well. But we shall see. All right, this is our speculative. These are just my points, my viewpoint. But we can never tell how the market is going to play out until we actually see it playing out. All right, so that's that on silver. Pound Swiss, I actually have a short setup on Pound Swiss right here, but we can see HFEDA is really showing a bullish side of it. But we shall see. Okay, we shall see. Euro Kiwi, I'm looking to short. USD CHF, I'm looking to short. USD CAD, I'm also looking to short. Those are part of my top trade setup. All right. So now all this said, I've taken some of your time. All right. And now let's take a look at the chart real quickly. Okay. So first of all, we're going to start with the trade I have opened, which is NASDAQ. Okay. And you can see, like I said, the market was quite bearish before. You can see lower lows and lower highs. All right. And all of a sudden, it broke above this particular trend line. Okay. This one right here. And then I took a buy right around there. Okay. And now this is the level I said I wanted to be broken and retested. If it broke above here decently, if we get a pullback to this region, definitely I will head onto the trade and see if I can ride it all the way to the new all-time highs, because I've seen so many analyses so far. If you go to the weekly band, we've seen that these assets always do some pullback. Sometimes, once in a while, they do all those heavy loads kind of pullback before when I get a fresh new all-time high from them. The same thing on S&P 500, the same thing on Dow Jones. This is NASDAQ. So it's all the same. It's the US stock market. All right. So we just have to wait. You can see there's a pullback, to the pullback, there's a pullback, and we're getting another pullback right here. So the possibility is we're going to get a fresh new all-time high on Nasdaq, possibly. All right. And at the end of the day, this pullback might not even be over yet. It might get all the way down to this region before the market now push higher. But let's just see how this goes in general. Okay. So that is my plan on Nasdaq anyway. But I'm currently in a buy trade, and I would love to see how it goes. All right. So moving on to the open, the last trade I have open, which is on the drawdown, which is Aussie yen. Don't forget, Aussie is the only currency when I check the economic heat map that seems to be very weak when you compare it with Kiwi. Okay, and you can see right here the Australian economic heat map right here. You can see the currency is still around 37.5% weak, but the stock is very strong, which kind of leads me to like leaning towards the bullish side of Australian dollar, which is the reason why I closed a few of my position on Australian yen last week. Don't forget the service and manufacturing PMI sector is very strong and quite decent right there, and the inflation is also not too crazy, and the labor data is also very good, which is probably the reason why we got this stock market as a very strong one. All right, don't forget that we trade the economy, not just the chart right here. Okay, on this signal, on this channel. When you look at my face, when you look at me, when you watch my video, you know we talk mostly about the economy, and we position ourselves to trade the economy, not just what is all this candle, the red and the green candle on the chart. All right. So now let's talk about dollar. What is going on with the dollar? United States dollar. Yes, and we all know last week we saw that Donald Trump seems to be leaning towards the Chinese side. He said, and I'm quoting right, he said, they're going to cut tariffs substantially, but it's never going to be zero, which I kind of understand, and I agree with him on that. Okay, it shouldn't be zero at all, it shouldn't be zero, but they should cut it substantially. And then we heard that Apple is taking their their US iPhone production or whatever from China to India. I'm not really sure how that's going to fly out or plan out. It's the company. I'm very sure they will make a deal with Chinese people or the Chinese government, and probably they will stay, because it's not just about the cheap labor, because they said it's not about the cheap labor, it's about the tooling engineers, based on what Tim Cook said. The video that's been circulating on social media, you've seen it, okay? Said it's about the tooling engineer. Now, it's about the tooling engineer. I'm not sure if they're going to get the number of tooling engineers that they have or they got from China or in China, from India. I'm not sure if that's going to play out, but if that actually did play out very well, I wish the company all the best. Okay, they should do what works best for them. But at the end of the day, the job is still not going to the United States, which is the reason for the tariff in the first place. So all those companies can bring their job back to the United States, but it's still not going to the United States. It's going to India. If there is a conflict, if there is a disagreement between Trump and the president or prime minister of India as well, what do you think will happen? Another tariff, maybe a 500% tariff on India, and maybe Apple will now say, okay, we are not doing India again. Maybe we'll be coming to Nigeria. Who knows, right? But I'm not sure if we have any tooling engineers. I'm not sure if we have that number of tooling engineers in Nigeria anyways. And I'm not even trying to throw shade right now. I'm just talking about reality. But how long is this going to go? This is not sustainable. That's just the point here. It's not sustainable. So they have to find a borderline somewhere they all can agree on, and there'll be peace, okay, all around the world. No trade war, no actual war. Everybody should just do business with each other without bickering, without fighting. I think that is just fair. Okay, that should be the 21st century kind of mindset, not all this fight and bullying. Anyways, that's just me thinking out of my kindness, out of the kindness of my heart, whatever. So moving on, dollar, for me personally, this pullback right here is not about enough for me. Okay, it's not even close to being enough. But we have two realities here. Okay, dollar can take this particular region as area of resistance, and then we're going to see it actually come all the way down further. Okay, approaching the 95 region. But for me, I'm not going to, this is questionable for me. Okay, it's very questionable for me. However, what would actually make me more calm approaching this, or maybe trading this, is if I get it all the way back to 50%, 61.8% region, right around the 103 region, then I can easily take a shot on the United States dollar, because right now, I don't think those jobs are going to the United States, honestly, and things are still going to be expensive. We saw some news coming out last week about, Shein. Okay, I'm not sure if I'm pronouncing it very well, or if I'm even writing it very well. Shein and Temu, I think I know Temu very well. Okay, so Shein and Temu are still quite expensive. Okay, some of the products that are selling for $18 before, right now they're selling them at maybe $22.5 or $24. Still, that's very expensive. So inflation is still bound to go higher. Fed is still bound to cut rates eventually, even though they are not doing it the way Trump wanted to do it. But at the end of the day, we still have to cut it maybe in June or in August. We don't know. So at the end of the day, we still have a weaker dollar outlook moving forward. So it's just still not clear yet. But we shall see. Okay, we all just have to sit down and see how all this thing pan out. But for me personally, I'm looking to short dollar right at the top there because of the monetary policy, because of what the job data is saying, and because of the inflationary data that will still be released moving forward, because we might likely see an alter inflation in the United States moving forward. But right now, inflation seems to be cooling down, which is actually what we have right now. So let's see. if the Fed will get their 2% inflation target this year. Let's see how it goes. So now coming to my top setup, I'm going to start with the USD and I'm going to be very brief on this one. So you have to follow me or write them down and plan yourself accordingly to move forward. First off, we have this pullback. Okay, this is very possible. You can get USD to come to this region before it starts dropping, which would probably like be around that 38.6%. Yeah, like I said, 38.2% around this region. Very, very likely to happen. But am I gonna follow this? Probably not. Okay, if I'm being real with myself, I will probably not going to take that short trade. For me to really trust a pullback, okay, or even refer to it as an actual pullback, it has to do at least 50%. I want to see the equilibrium at least. So when I come to this top right here, then that will give me a better sense of the pullback to take the trade. However, we saw what happened right here. Okay, I was expecting a bit of a deeper pullback to this region, which actually fall at 50% back then, but that didn't happen either. USD is not the kind of pair that do pullback all the time. Okay, it's a very weird pair that just move. You can see what happened right here too. Move, pum, 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 pum. These two are definitely not going to be up to 50% Fibonacci, especially this one right here. It's not 50% Fibonacci. So I'm not super sure about the 50% moving forward, but we have to see how it goes, and I have to literally, plan myself accordingly. And don't forget, if you want to join my trade setup, if you want to join me out on how I pick all these trades, okay, you can always send me an email or just comment that you want to join my trade signals, or you want to join my mentorship group, or you just want to have a conversation with me. You can always chat me, or you can always reach out to me. Where you can comment, or you can send me an email, or you can just slide to my DM. Okay, so moving on, that's my setup on USD pullback. This region, I will see if I can consider it, or maybe a much better region right here at 50%. I'm going to consider that also. We'll see how it goes. But right now, I'm just watching USD CAD at the same time. Another reason, another setup that might not do an actual pullback. It's very crazy. But when you come right here, okay, when you come right here to edge find that of setup, all right, when you come right here to check it out, you see that we have USD CAD and USD already -6, bearish, which is still very good. But what this will give me is the technicals, which is why if you don't just trade economy alone, you have to mix it up with the technical prowess, technical methodology, so you can make a better decision. For me personally, I would really love to see this pullback. Okay, it will be very good. As a matter of fact, if I can see it to come to 78.6, which will be a much deeper pullback, but it will come to retesting this dynamic trend line, okay, dynamic support, dynamic resistance right here, which is the trend line. Okay, if I can come to retest the trend line, that will make a much better sense. Okay, and possibly I will even take the buy. If it break above here, definitely I will take a buy all the way to the upside. Might be a short-term buy though, but I will literally take a buy just to tap onto this pullback before I go ahead and sell USD CAD. Don't forget, the reason I'm selling US dollar is because of the monetary policy. They want to cut rate, inflation is expected to go higher. Okay, and manufacturing payment is already down, so probably the service payment will also follow. I'm not sure, but we have to look at all of this and then make a better decision. And yes, if you take a look at the US economic heat map as well, which I'll be sharing later. Okay, let me show you right now. So this US economic heat map, you can see what we have right here. The currency impact is around 42.8%. The stock impact also around 42.8%, which is below 50. And you look at all of this data, everything looks very, very, very light. Okay, it looks really light right there. We're not seeing that all those heavy numbers. You can see, like I said, yes, the quarterly GDP is actually very strong in the United States. You can't take that away from them. Okay, they're still the biggest economy in the world. Okay, the biggest. In terms of spending, they have the money to spend. Okay, no other country in the world can come to that. Even come close to that. They have this money. They have trillions of dollars to spend every year. All right, but the manufacturing is slowing down. The service also seems to be slowing down drastically from 53.5. Market is forecasting 53, and we got 50.8. So it's slowing down. It's slowing down. It's happening. The retail sales is still pretty strong. Inflation is also slowing down. Okay, the wage growth also seems to be slowing down. Unemployment rate seems to be going up. Initial jobless claim seems to be, it actually looks the same, which is very good. Just job opening seems to be slimming down as well. ADP also seems to be, going up. ADP is actually very fair. Non-farm payroll was good last month, and that's more like it. So you can see I said so many things like slowing down. And when everything is slowing down on the currency part, it's not looking good. And when you now take a look at the policy, the monetary policy, it is not the best. Okay, they want to cut rate, inflation is expected to go up when the target is around 2.2%. So it's not super cool. But let's see how it goes. Okay, so yeah, we're going to see how it goes. The data change very fast. We have to see how it goes. So on USD CAD, if it tends to break below here, I might actually short. Okay, but the setup, the entry is going to be shared on my groups. So if you're interested, you can always chat me up. Okay, don't forget that. But for me personally, or what I'm going to recommend to you, if you're watching this video, is that wait for the pullback, okay, and then take a short. But with the pullback happen, probably not, because you can see all this move right here on USD cap. It is bound. It doesn't do pullback like that. It doesn't really do pullbacks like that. Okay, so if you go back in time as well, you see that it doesn't really do pullbacks like that. So you have to take that with a grain of salt. So EURNZD, which is one of my top setup, I'm looking to buy this one, but the edge finder is suggesting to short it, which I don't really know why. I guess because of Euro's weakness and Kiwi strength. Okay, we've seen NZD economic attack. It is crazy. It is crazy strong. Okay, let's take a look at it again and then I'll wrap it up today. Okay, NZD economic heat map right here. And see NZD economic heat map right here. You can see the level of strength. The level of strength that is showing right there. Okay, it is not the easiest. And you can see right here, both the currency and the stock market is massively strong right now. So I guess that is the reason why we're getting that bearish reading on economic on the edge finder subsetup. But we shall see. Maybe a much deeper push to the downside just to see this actually go up later. All right. But right now, I'm just gonna sit right here and see how this goes. But right for now, I'm not gonna sell, and neither am I gonna buy. Okay. So CAD JPY. On CAD JPY, I'll say just watch this very closely. Okay. We have a sell opportunity, and we have a buy opportunity. The buy opportunity will be at the top here. Sell opportunity will be probably from here down to this region, or maybe wait for it to come down, break this region right here, and then pull back so we can sell it further. Okay, I would consider this before I consider this. And when you take a look at the COT data, you know that we still have CAD being a general short currency, and we have JPY, Japanese yen, as a general long currency. Okay, institutional are buying JPY while they are selling CAD. So that might be another reason why I don't want to buy right now. I'm looking to sell. Okay, so keep that at the back of your mind. Then the next trade, the next pair will be NZD JPY. Don't forget, the Japanese yen also is what is being okay, JPY is being bought by institution, and NZD is being generally shorted based on the net positioning for both currency. Okay, it's been generally shorted, and this one is being generally bought. Okay, so you have to pay close attention to all of this. Okay, however, based on the chart, maybe something like this, and then if we get a weakness on NZD JPY, you know, I will still look to short it. Well, I'm not going to rush into this personally. However, based on the economic heat map, right, I mean, the top setup right here, you will see that NZD JPY is rating a whopping 7. Okay, to the score of 7, which is bullish. All right. So, do I want to sell? Probably not. Okay, I don't like going against that finder. Honestly, I tried this a couple of times. It didn't really work well. And when I follow it, it makes better sense. Okay, I got to ride all the beautiful run. So I'd rather just wait for this one to break up over here and then see if I can buy. But right now, I'm not going to buy 100%. As a matter of fact, anything below this region, I'm definitely not going to buy. Okay, I only buy if it breaks above this region all the way to the outside. Okay, so that is the plan. Now, am I going to sell? Maybe. But I want to see this rejection first. Okay, then I will sell maybe below here. But right now, I'm not going to buy. I'm not going to sell. I'm just going to watch. Okay, you might want to watch with me. No problem. NZD dollar, Kiwi dollar, fine. It's a very fancy trade, but I need this pullback, man. I need the retest. Okay, and then we'll fly to the outside. Possibly. But you can see on the dollar pair, you're going to hear me say, I want to pull back on the dollar pair. That's because I need the XY to also make that push to the upside. So we test that 50% Fibonacci so we can sell it. Okay, so we can sell it. So if that happens on NZD day, on NZD dollar, I'm going to wait for that pullback. On pound dollar as well, I'm going to wait for this pullback also. Okay, wait for this pullback, then go on and buy it. However, on the intraday perspective, the moment the market goes below here, I will look to sell. All right, so if you want to get the signal, you want to get the street settled, my entry and everything, you might want to join my, you might want to contact me quickly for that before it actually played out, because this month has been quite interesting for me personally. All right, so that's on pound dollar. The general view is what, wait for the pullback and then take a buy. But the short-term view is wait for this part, break of this particular low, pullback and take a sell. If you can catch that with this explanation, then good for you. But if you want a more concise and elaborated explanation, you might want to contact me. So euro dollar, do I want to take a short-term sell? Yeah, definitely. I think there's an opportunity to take a short-term sell on this one also. And break below here, I'm not sure. No. It's not ideal. It's very close to 50%, so I might not want to take that one. And it's also very close to the trend line. Okay, right here. So, but I'm looking to buy euro dollar to say the least. Okay, the pullback level can be deeper to 61.8, or might just be at 50% before it fly up again. And that's why I don't want to take that short-term sell. I hope you understand what I'm saying. So that is that. But it's one of the top setup. Okay, one of the top setup edge finder you can see with a reading of what? With a reading of 6 EURUSD right here. And the next pair would be Australian dollar USD. Before, and I'll talk about silver and Bitcoin, then off we go today. So on Aussie dollar, I'm not really solid about this, and you can see the economy is also not very strong. So I'm just gonna say I'm gonna put a question mark on this, and then we talk about Bitcoin. Bitcoin is a much better one to talk about. So Bitcoin made this very nice jump last week, all the way from here where I was buying from, and it gave me this profit. I closed around here at around 71. I closed one at $71. I closed one at $58, and I closed another trade at I think $53. That was trailed out. Okay, so I opened like many position on it anyways on different accounts by the way. But what's the plan? The plan will be to see a pullback. Probably back to this region, then we take it back moving forward. Okay, but is it likely going to happen? I'm not really sure, but it seems to be fading away at the top. So maybe it drop and then we take it back to the upside. So that's the plan on Bitcoin. And it also has some reading right here. That's some reading. It has around another +5. Okay, it's right here bullish with a 5 score. So yeah, that pullback might happen. We should probably take this to like maybe +3 before we now see the push to the upside. We should probably take it to like maybe back to 8 or 10 moving forward. But right now, without that pullback on Bitcoin, I will probably never gonna take it back. Okay, I would rather watch it go, because don't forget I also have some spot position on this one. I'm buying Bitcoin. Okay, sports contract, sports position, spot trade. I hope you understand what I'm saying. All right. But when it comes to CFD part of it or future part of it, unless it does this pullback, I'm definitely not going to trade it as a future asset. I would have probably just leave my spot trade, which is still running profit anyways, and I'll leave it to just keep doing these things. All right. And lastly, silver. Okay, this is a very long video anyways. So on silver looks quite neat. Okay, but like I said, yeah, this is 34 high. Yes. This is 34 high. Okay, and this is the all-time high right here. This is at $44. I think we should have another high at the top. Yes, we have another high at $49 on silver. I would eye too. Is there any other all-time high? Excuse me, any all-time high on silver? I think that's everything. Okay, so the all-time high is at $49, and we are still at $34. So that is something you need to pay close attention to, because, like I said, silver is very undervalued. Okay, it's not as valued as gold. Okay, so we need to see if we can take advantage of this and buy silver moving forward. Probably buy it and target $44. But I'm gonna take a buy. I want to see a break above here, pullback. Okay, and then ride it to the top. Okay, but for now, I'm watching. Don't forget, I took a buy right here, and I closed it at the top there, which was very good on silver anyways. So that is that for me today, guys. Plan yourself very well, prepare yourself accordingly, and let's see how we can make the market work for us this coming week, okay, or work in our favor this coming week. So I'll see you in the next one. Don't get margin called, don't make mistakes. You need to be in the market all the time. All right, and I will see you in the next one. Have a fabulous day. Bye for now.